Our next question is from Jordan Gowling from Post Media.
Hi, good morning. Unemployment ticked up last month, and your own Business Outlook survey looks like hiring appetite is going to soften quite a bit over the next year. How worried are you about this, and how much of an impact will it have on your future rate decisions if it worsens?
Well, I gave a whole speech on the dynamics in the employment market 2 or 3 weeks ago in Winnipeg. But so let me give you the short version. We've seen a big adjustment in the labor market, and through that adjustment, we have not seen a lot of big job losses. What we have seen is that employment is growing more slowly than the labor force is growing. So, put that. What does that mean? Well, businesses in general, on net, they are hiring, but they're not hiring or creating as many jobs as there are new people entering the labor market. So, and you see that in a few dimensions. What it basically means is if you're entering the job market, it's taking longer to find a job, and you can see that in the job finding rate is going down, and the unemployment rate has been ticking up, reaching 6.4%. If you look at how that's affecting workers, it's not affecting all workers in the same way. It's particularly affecting new entrants into the labor market. So it's the younger worker who's finished schools, graduated, and is entering the labor market looking for their first job. It's taking longer to find that first job. It's the new immigrant, the new non-permanent resident that's entering the country looking for a first job. It's taking longer for them to find their first job. So their unemployment rates have moved up just proportionately more than other parts of the labor force, what we often call prime age workers. What that's telling us is there is some slack in the labor market. And that is something that we certainly factored into our monetary policy decision. Going forward, we think there's enough slack in the labor market. There's enough slack in the economy overall to bring inflation down. We are seeing the effects of slack pulling inflation down. We're seeing broad inflationary pressures ease. Going forward, our own forecast has GDP growth picking up. And with that, could be a bit of a lag, but with that, you would expect job growth to pick up. That's something we think needs to happen, and that is something that factored into our decision to cut our policy rate a second time.